the end of a volatile and dramatic week for the markets, for the global economy, for Main Street, for American households, for the whole country, the whole world, all because of one man, Donald Trump. The Dow today rising more than 600 points. That's after the White House said it was optimistic about a trade deal. And despite China raising its tariffs on American goods to 125%. There are other deeply ominous signs for the economy. A measure of consumer sentiment dropped to the lowest level in nearly 3 years, the second lowest level in the history of this survey being taken. And there's this, too, from CNBC, quote, respondents' expectation for inflation a year from now leaped to 6.7%, the highest level since November 1981, and up from 5% in March. So what that means is that the American consumer is now expecting inflation to go up, to be higher. And that sentiment comes 6 months after an election almost completely defined in the minds of swing voters by voter anger over the cost of living, the cost of stuff. CNBC adding this, quote, the survey showed unemployment fears rising to their highest since 2009. An economist tells CNBC, quote, consumers have spiraled from anxious to petrified. In the midst of this increasingly dire economic picture, you might think that business leaders would now feel comfortable about sounding the alarms. And make no mistake, they are alarmed. Headlines about a slowdown and warnings about the economy are everywhere you look. But brand new reporting suggests that they are now pulling their punches on what the cause of all of this uncertainty really is. Because, as we said at the top, the cause is one man and one man only, Donald Trump. New York Times reports this, quote, Wall Street's biggest firms on Friday attempted the tricky two-step of revealing the toll of President Trump's whiplash tariff policy without outright criticizing a man who has repeatedly tangled with the financial industry for slights both real and imagined. It is becoming clear that if financial titans have flashed some anger around Trump's tariff policy, they are wary of criticizing the president directly. One reason is that Trump has shown he's willing to confront bankers publicly. Shortly after his inauguration, in a speech given remotely to executives gathered in Davos, Switzerland, Trump complained to Bank of America's chief executive, Brian Moynihan, that the lender's conservative customers were having their bank accounts closed. Bank of America denies that. The First Lady Melania Trump has also claimed, without evidence, that their son Barron was denied an account at an unnamed bank. Some people on Wall Street are making it clear that they are holding back, and the threat of retribution from Donald Trump is why. Bloomberg reporting this about a call with a top J.P. Morgan analyst, quote, after calling the president's plan a, quote, sledgehammer, brute force approach, the analyst said he withheld certain material with his firm and colleagues in mind. Quote, this is the first time I've ever had to do a call where I had to think about the things that I was saying, not just in terms of how they reflect our views on markets and economics, he said, adding that he had never before taken such considerations into account in a career spanning more than 30 years. Quote, people are being held accountable for their views and the things they say in ways that they probably shouldn't be. So I've said most of what I wanted to say on this call, but not all of it. The business community, intimidated by Donald Trump and his threats of retaliation and retribution in the midst of a crisis created by Donald Trump, is where we start today. With me at the table, my friend and colleague Steph Ruhle, co-host of the 11th Hour here on MSNBC, as well as NBC's senior business analyst. Also joining us, former Deputy National Security Advisor to President Obama, MSNBC contributor Ben Rhodes. And Gillian Tett is here, columnist and member of the editorial board at the Financial Times. Steph, I've been glued to and riveted by all of your reporting and analysis and your personal views on where we've sort of careened. And this reporting is something I think you mentioned on the show a few days ago.
That reporting right there about the J.P. Morgan analyst, I think that tells the entire story. Because what we are experiencing is a crisis of confidence, okay? The underlying economy is good, right? We had a good unemployment number. We had a good inflation number. But look what's happened. One of the reasons America is considered the greatest country in the world. We talk about American exceptionalism. The reason other countries want to do business here is because we have the rule of law. We have a government with three separate but equal branches that keep one another in check. We invest in science in this country. We have the greatest universities. Now imagine the rest of the world watching this. They're watching business leaders who are not shy. They love speaking publicly. It was 2 years ago, Jeff Bezos was out there saying he didn't like Joe Biden's policies, or he didn't like what he was doing around inflation, didn't like how he wanted to tax corporations. Now they're practically silent, or they're doing these extraordinary high wire acts, right? On Tuesday, the morning of the pause, Jamie Dimon said on Fox News, and it was no mistake that he went on Fox News to speak that to that audience, he said a recession is coming, or maybe it's here. And today they had their earnings report, and on that call, he said, he didn't say the R word, but he said these are really troubled times ahead. But the fact that they're unwilling to say these things, the fact that that JP Morgan analyst who gets paid to analyze risks was unable to assess those risks and tell their clients. As soon as I read that report, I remembered 6 years ago, I interviewed Steve Schwarzman, the head of Blackstone, and in Davos. And I remember distinctly him telling me we would never invest in Russia. Not that there's not opportunities there, but it's because they can't trust the rule of law. And that is exactly what we're on the precipice of here. Because yes, stocks are way down because what's the impact of these tariffs are going to be? But the reason you are seeing treasuries get hit, the bond market getting hit, is because the rest of the world is saying, I'm not sure if I'm going to put my money in the safest place in the world, the USA, where in U.S. treasuries, because maybe it's not so safe. That is what is the most alarming.
So I have tried to take myself to school in the last few weeks, and one of the things that has been explained to me a few different times that I'm starting to understand is that the bond market is one of the best ways to understand the instability and to sort of parse out all of the doublespeak maybe that leaders are saying that the bond market doesn't lie. Will you explain that to me?
The bond market is the daddy, okay? Because that is where the whole world, that is where they park their money in the safest place.
In a crisis.
Right? In a crisis. So when the stock market goes down, right, the stock market is a riskier asset. Where do you put your money? In the safest place. In U.S. treasuries. So in any normal crisis, stocks go down, everybody parks their money in treasuries.
Like COVID.
Correct. But when suddenly both go down, that's when that is what spells disaster. Okay? Because suddenly when bond yields are up, it becomes way more expensive for us to refinance our debt, which is what we have to do. If suddenly China, who's the second largest holder of treasuries, if they're flipping us off saying, you know what? I'm sorry, if we're in the middle of a trade war, we're out. That could actually spell disaster. And the reason that is so jarring for markets is because every other time we've had a crisis, you can't even figure out the risks under the underlying economy is a disaster. This is completely self-made. It's why the market this week has been like up and down, because investors are hoping and begging and praying that Trump just scratches this thing. Because if he does, we actually have a good economy. But if he doesn't, he has us on a collision course for disaster.
And how do you put the genie back in the bottle when he's now proven himself to be so herky-jerky? It was Trump who came out and said, I changed my mind, and the markets got yippy while his own officials were testifying. Never switching. This is the policy.
See, but that right there goes to the crisis of confidence. Who do you believe? Right? His own Treasury Secretary. When Donald Trump announced the pause, his own Treasury Secretary said, this was always the plan. Really? Was it the plan? Because Trump just said, I was looking at the bond market. I listened to Jamie Dimon. They're telling you different things. And we're watching Wall Street that wants to be optimistic, tie themselves in knots over this idea that Scott Bessent is going to be our savior. And let's be clear. Scott Bessent, the Treasury Secretary, is a super smart guy. All of these markets we're talking about, he understands them. It's why he's worth what he is. But the fact that he's going on television and not being intellectually honest, nor is Howard Lutnick, that's what's so disarming, because people are saying, oh, great, Scott Bessent is going to be the one negotiating these deals. The negotiations, Nicole, are not rooted in truth, because Donald Trump's understanding of trade deficits aren't reality, right? These countries are begging, they're kissing my ass, they're begging for a deal. Donald Trump's plan is we have to wipe out trade deficits because he doesn't understand trade deficits. You think Vietnam is going to start importing more than we do? It doesn't work that way. I'm not saying there are some unfair trade practices. If only we could get together with our allies and take on China, kind of like the Trans-Pacific Partnership that they wanted to do at the end of Obama's second term. But instead, we're going at it alone. And Donald Trump, unfortunately, at this point, has overplayed his hand. Investors are just hoping that a Bessent saves the day, or maybe Trump lays the blame on a few other guys in the White House and punts them and brings other guys in. But this is wish casting. And if you're in the business community, big or small, I mean, Nicole, you think something's going to get solved in 90 days? USMCA, the last trade deal done with Canada and Mexico, took 18 months to complete. You really think just because they keep saying to us, 75 countries are calling us, what deals are they going to get done? And this is why people are somewhat paralyzed. And it's funny because they want to buy stocks, right? They're looking at companies they like Apple. I want to buy this, I want to buy that. And they're going, but I don't know what's in store. If suddenly AirPods are about to cost 39% more, right? If Amazon is saying, well, maybe all of our Chinese sellers are going to be off the platform. And so for those Trump supporters who say, you know, I'm grateful for what the president is doing. He's doing the hard work. Just wait. Because everything in our life is about to get more expensive. If you ran a small business, you better bet your bottom dollar there's a decent chance one of your suppliers is China. So walk into a shopping mall tomorrow and take a close look at your favorite stores, because there's a good chance if these tariffs are in place, even if they're only 10% with most of these countries, stuff's about to cost more at the exact same moment when, look at the Treasury market, borrowing costs are going to go up. So if you put things on your credit card, well, that's going to cost more.